Hey everyone, welcome to Smart Investing. Today's stocks that I have for you guys today are these three stocks. I have ticker symbol CMA, ticker symbol AMTB, ticker symbol BYFC. So first one up, CMA, Comerica, ticker symbol CMA. So we have this stock at $40.85. Market cap at 5.38 billion. Looking at the first page, really nice numbers for the 52-week high and low. Earnings are pretty strong, really strong. Moving on to this one, then PE ratio at 4.3, very undervalued. Dividend is actually not bad at 2.84. And dividend yield is at close to 7%, which is pretty good. So overall, this looks like a pretty good stock actually to add to the watch list so far. Moving on to, well, I forgot this part. Volume is pretty active. Market cap, again, still pretty good for a small cap company. It seems like the stock is pretty active. For an income portfolio, this will seem okay. And then, yeah, I mean, overall, for any kind of strategy, it seems pretty good right about now. So looking at the technicals, we have here the 5-year trend. We have it at a low of about $40. 200 exponential moving average. The beginning of the year, it was about, I don't know, $68. So that is nowhere near it as of right now. And even the few months that have passed by since March, it has not been confirmed or hasn't even reached levels of breaking its previous highs of about 47. So we see that slow climb up, but again, it has to be like $47 just to have people interested in the stock. So the technicals, I'd say they're kind of weak, but based on the first page, everything looks really good. So fundamentally, excuse me, fundamentally things look good. On the technical side, they look kind of weak. Based on 24 analysts, we have here 33% said strong buy, 25% said pretty much yes for a buy, 33% said hold, and then 8% said sell. That's a high amount of people to evaluate this. We have this at quality, which is the highest rating, 7.71. Quant rating at 6.45. So, hold on one second. Overall rating was 4. But when I click on the quant rating, growth rating says very strong, 5 out of 5. Value is 3 out of 5. Overall rating for income is 3 out of 5. Quality, 5 out of 5. I don't know about that. And then momentum was 2 out of 5. Again, I'm not too heavy into the quants, just want to kind of look at them, and that's pretty much it. Now with some numbers here, fundamentals, we're gonna dive a little bit deeper. So we have actual and current estimates here. So Q2, they beat estimates. Q3, they beat. Q4, they beat. Q1, they beat. And now we're waiting for Q2. Q2 has downgraded tremendously. So we'll see what happens with that. Oh, sorry about that. When I look at the annual estimates we have here, decent numbers for return on equity. Return on assets seem pretty flat and weak. Net margins are pretty good, actually. They're pretty good. Then we have the debt at 93%. Net income, well, I'm going to skip all that. Going to jump right into the cash flow. So we have, let's see. Oh, wow. Ouch. Whoa, whoa, whoa. So we have like negative 17 billion in cash flow. Yeah, that's not good. Not at all. Let's look at the net income real quick. They're only producing a little above a billion. So where are they gonna get the rest of the 16 billion? Yeah, it's not good. Not good at all. Not good for this stock. I don't see I don't see this if the bank sector crashes, I don't see this stock doing too good. At first thought, I thought it was gonna do okay. Uh, Again, they're very active, but with that cash flow, yeah, that killed it. See, like if the cash flow would have been covered by the net income, it would have been borderline saying yes or no. But with the cash flow negative as high as that, yeah, that's a definite no. That's a definite no. Moving on to the next one, ticker symbol AMTB. So the company name is Amarant Bancorp Inc. As we can see here, first page, so market cap is at 605 million. Sure, Wall Street doesn't like it. Earnings per share only at 2. Pretty decent, understandable. PE ratio is only at about 9. Price to book is under 1. Dividend yield is only at 2, and the dividend payment is only at 36 cents. 52-week high and low. That is a difference of at least $10. But again, it's still pretty low based on the share price. Nowhere near its 52-week high. And as for the volume and the market cap, like I said, market cap is needing a lot of work. And for the volume, it needs a lot of work as well. Moving on to the technicals, you can see here, whoa, look at this big drop in 2019. Just like, you can see it kind of went up real quick and then all of a sudden it dropped much lower than it did. And the funny thing is, ever since 2019, it gained in 2021, but again, it just went right back down. It's just pretty insane, to be honest. And then let's look at the 1-year trend. You can see that drop. And then here we go again, started to creep back up and experiencing those drops once again. Things don't look good, but I could be wrong. So for right now, we're just going to continue. Quant rating, the highest rating that they have was quality, close to a rating of 8. Overall rating was 3 out of 5. So we're going to see what is going on with that. So they missed estimates for Q2 from last year. Q3 they beat. They missed in Q4. And then Q1 they missed in 2023. And then for Q2 they lowered their guidance. And that is a really big difference from Q1 to Q2. They lowered estimates pretty much in half. Looking at the ROA, it's pretty weak. It's okay, but it looks like it varies. Earnings per share, it looks like it varies. That looks like it varies as well. Everything is kind of mixed up and down, nothing flat. Most times flat is good. You know, it's not really a loss, but it's just having the right idea or the right team to make adjustments and improvements. So we have here cash flow, negative 49 million, and investing, negative 1.4 billion. $600 million. So they are cash flow positive, actually. They are cash flow positive. Only by a little bit. I only have about 10, I don't know, 10 million. Is that right? I'm trying to think if I counted my zeros correctly. 10 million in cash flow, if I'm not mistaken. 10 million in cash flow. That seems about right. That seems about right in 2023. So 9 cents for the dividend payment. And then we have here. Wait, nope. I want to read a little bit about them. I wonder if they have any. Oh, they have primary markets in South Florida, 16 banking centers in Miami, Broward, and Palm Beach. I know what that is. Offices in Houston, Texas. Also has a loan production office in Tampa, Florida. So this company is doing okay, but again, they need work. Hopefully they can get to the $1 billion club. And then from there, this will be the winning horse in the horse race. This is a stock actually that I think it has potential to be a growth stock. Well, not a growth stock, but it can gain momentum for it to gain exposure into the higher market cap and then the share price. And as for their market locations, that'll play a big factor as well. And again, they have decent numbers. They're just not getting that share price where they want it to be at. So I'm feeling kind of neutral about this. If I had to give a yes or no answer, I would say no. And that's because for this year, I guess they're doing okay with the banking sector. Unfortunately, they might take a hit, but I think with their numbers, they might do okay. Who knows? I hope they do better in one of the quarters that are coming up. So they seem okay. Hopefully next year and beyond, this bank will be around, and we'll see what happens. We'll definitely see what happens. So next stock up, which is the last one, ticker symbol BYFC, Broadway Financial Corp. Stock is only at $1. Surprised the stock is still alive, to be honest. $75 million company. That's a hard pill to swallow. This is like hanging for dear life here. Not even $1 difference here. Earnings are a measly 0.08. PE ratio is at 12. Volume is pretty weak. Again, share price is just above $1, like literally just above $1. I wouldn't be surprised if they get a notice from the NASDAQ or the S&P 500 or one of these major indexes giving a notice stating that they have to have their share price above $1 or there will not be a consideration for the stock. And by the market performance, it can be either a gift or a curse. So if they're not careful, they might get delisted, and worst comes to worst, if anything, they might go to the over the counter. If not, they just might get delisted and then pushed over into a different ticker symbol, depending on divisions that they own. But so far, I mean, this company is awful. The highest it's ever been in 2021 was only at close to $4. That's still pretty trash. But I bet that those gains in 2021 were sure enjoyed by so many people, because the cheaper the price is, the higher the percentage gain. So there was a lot of potential to earn money during that time for so many cheaper stocks. Moving on to the analysis real quick. Highest rating was growth. I can kind of understand that, but this stock is in a tight spot. It's in a tight position. I don't see it going anywhere for an uptrend. I mean, people just don't like this stock. Market cap is just awful, really. This is like a micro cap company. And then we'll look at some numbers here, but I don't think people will be impressed at all. Negative return on assets for 3 out of the last 5 years. Then 3 out of the last 5 years of negative return on equity. Negative earnings 3 out of the 5 years. Negative margins. Oh gosh. They lowered their debt. I'll give them that. That's one of the lowest debts I've ever seen for a banking services company. Now we're going to move on to the cash flow. Cash flow is at, let's see here. I'm going to add these numbers up. So 6 million. Wow. Yeah, they have negative, at least negative 200 million for the market cap. That's more than their market cap. I could see the stock actually getting delisted anytime soon, especially if there was a bank run or bank crash. Yeah, I don't see this stock surviving. So definitely no, get it off your list. Awful stock. And that is it. That is all I have for you guys today. I'll try to make 2 more videos. If not, see you guys tomorrow. I'm back in business. Gotta go back to work. I am working now doing this video, but again, I'll see you guys real soon. Take care. Have a good weekend. And stay tuned. Stay tuned for more banking videos. I will be done pretty soon. I have maybe, like I said, close to 50 stocks left. Seems like a lot, but not really. So I'll finally end this banking services sector. So thanks again for watching and being patient with my evaluations. I'll catch you guys real soon.